everybody, my name's Johnny, and today we're going to be talking about what a stock is, and what the stock market is, and just how exactly that works in today's world. So the stock market, or the concept of the stock market, was basically formed about 400 years ago. I'm just going to give you a brief, very non-detailed history of it. So about 400 years ago, there were a bunch of Dutch traders sitting around, and they each owned, these various companies. And they decided, okay, well, what if we could sell a small portion of our companies to each other? And so they decided to do just that, and the concept of buying and selling a share of stock was born. So how does that work in today? How does that correlate to today's world? Let me go ahead and give you an illustration just so you can understand it, from bottom to top. So let's say that you have a company, a muffin company, for example, and you're just making muffins, selling them straight out of your kitchen. So you're doing this for quite some time, and you're actually making money on it. And over time, you realize that even though you're making money and you want to continue to grow the business, you need additional money for some reason. Maybe you need more room for inventory. Maybe you need more money to buy the supplies to keep up with the demand. So whatever the reason may be, you decide that you need more funding. So you go ahead and you try to get investors to fund your company. You don't have anything to offer them but a portion of the value of the company, right? A portion of the equity of the company. So you decide, okay, well, I'm going to sell them a percentage of the equity of the company, and they're going to give me money for that so that I can continue to grow the business. So over time, you come to a point in the company where you've reached a certain amount of sales and profitability, or whatever the case may be, and you decide, okay, I want to make this company available for anybody and everybody to do the same thing, to buy shares of the stock of this company and help fund me in exchange for owning a portion of it. And so you decide to go public with the company. And so you have what's called an initial public offering. Now, for this to happen, you have to get a hold of the Securities and Exchange Commission, and you have to be government regulated, and you have to work with a bunch of different investment and banking firms. And basically, you all come together and they set a value to your company, right? They give you a market cap, and that's saying this is the entire worth of your company in dollars. And they base that off of asset and inventories and credit and goodwill and all different sorts of things. And they give you this final price for a number that represents the value of your company. And then that entire value, that market cap, is divided into shares. Now let's give an example. Let's say that your entire market cap is $1,000, and each share is worth $10. So necessarily, since each share is $10 and your total market cap is $1,000, that's going to be 100 shares. 100 times 10 equals 1,000. So let's give a different example in way bigger numbers. Normally, when a company becomes public, they're going to have several million, if not several billion dollars worth in their market cap. And a popular place to start as a pricing point for their for each share of stock in their IPO is around $15 to $20. So let's say, okay, this company is worth $20 billion when they decide to go public with it, and they decide to make each share $20. So necessarily, there's going to be a billion shares. $20 a share times a billion equals their $20 billion market cap. That's basically how it works. So when you go ahead and you buy a share of stock, you are actually buying a portion of that company. And that's why it's really important to see yourself as an owner of a business. That's why it's really important to say to yourself, okay, I'm going to buy a portion of this business. I need to know how this business works. And that's how you can be a better investor, by understanding what you're buying and what you're selling. It's not just a little blip on a screen. You are actually buying a portion of the company. And as an owner, you have a say in the direction that that company goes. So I hope that helped clear up some misunderstandings that you might have. I hope it helped give you a better picture of the history of how the market and how stock came to be, and just gave you a better understanding of all that. And also just something I wanted to clarify, throughout future videos, when I refer to the market, I'm generally going to be talking about the American stock market And if I say beating the market, I'm going to be talking about having a higher percentage of returns on my stock that I've specifically chosen versus just the whole stock market, which is generally represented by the S&P 500 or the Dow Jones Industrial Average. Also, I just wanted to clarify that I'm not an investment advisor. This is not investment advice. This is just me saying what I understand and what works for me, and is purely educational and for entertainment purposes only. Before I go, one more thing that I wanted to say is I want to plug this product right here, Pura Vida bracelets, and let me just go ahead and open it up and show you what it looks like here. I close this bag too tight. Bear with me here. Bear with me. Okay, so here we go. This is just an example of one of the products. See? Very cool here. And you can go ahead and get this product by going to purevidabracelets.com. Now, when you get there, go ahead and use the code DelaneyLang20 at the checkout, and you can get 20% off any of the products site-wide. Alright, well that's all for today. I'll see you guys in the next video. Please like, comment, subscribe, share, and I hope to see you next time. Bye.